Hello, weekend. It's Adil Fasal here, market analyst for CFDs.com, bringing you a trading perspective on the US markets for the Monday, the 16th of November 2015. This video is brought to you by CFDs.com. Be sure to visit the website, also the educational site as well, www.cfds.education. Now, a new app has been launched, and I'll be doing a separate video to promote that, but certainly be sure to download it on the App Store on Android, the Google Play Store basically, via, it's called the Trade Signal, and be sure to download that. Okay, now let's have a look at the markets. Now, in terms of the US markets, obviously we know that the markets have been gripped by fear. We did have retail concerns on Friday, and obviously now we have the French terrorism concerns, and that certainly seems to be dominating. Now, the S&P 500 on the Friday certainly sold off quite substantially, quite a sell-off, quite an impressive sell-off, to say the least. You can see here we're into previous resistance equals support at 2020. Your next level of support, if that cracks, is going to be 1980. Okay, now if you go to the 60-minute chart, you can see that we are coming into gap fill support at 2018. Below that, we are going to see support at 1995. That's your next level of support. Now, the 10-minute chart on the S&P 500, you can see here we've certainly continued to make lower lows and lower highs. There is an unfilled gap above at 2045, so one needs to be careful. Also 2075 if there is a powerful short squeeze in the markets. But everything certainly is pointing to a downward direction. But with regards to the US markets, it will only be downward based on the effect of Europe. Inherently, it remains strong and certainly is potentially into support. So 2020, if that cracks, then obviously 1990 is a level to watch in the S&P 500. Now, if you cross-reference that or cross-verify that with the Russell, as always, so if I bring up the chart of the Russell, let's just have a look here. Okay, so the Russell is here, this is the IWN. Now, this is the IWN. This is actually showing some support here, and obviously you're looking at gap fill support over here. So the Russell certainly is potentially into support. If that cracks, then you have a gap fill support below. And these are the two levels that we're going to watch in terms of support. Now, you do have a diagonal trend line support as well. So if I take the pivot lows here, and you are looking at support in this region. Now, you can potentially connect these together as well. So again, two levels of diagonal trend line resistance. Okay, with regards to the actual markets itself, you certainly have held onto those resistance zones there on the Russell, and the market obviously has flushed. If we do move higher, there is an unfilled gap here. Okay, just highlight that for you. You are looking at an unfilled gap in this region. Okay, so the next one we're looking at is the IWM. Let's just bring up the IWM for you. Okie dokie, right, so we've broken out that diagonal trend line. In terms of support, obviously you've got horizontal support down here, and then obviously you have the support here, which is the gap level. And that's basically the zone that we're looking at in terms of support on the Russell itself. Okay. Right, so you are looking at gap fill support at 110 on the Russell. A flush, you do have support at 112. So again, that's going to coincide with a potential move on the S&P 500. So you are coming into support. So a lot of the bearish news may well have been factored in. We'll see exactly how the US markets open up and how the Asian markets react as well. The Wilshire, looking at the Wilshire, you can see a flush on the daily, quite substantial flush as well. Okay, you are looking at a support here, and obviously previous resistance equals support. So multiple levels of support coming in on the Wilshire as well. So one needs to be very careful in terms of adding any additional levels of short positions on the market, any bearish positions. So in terms of being vulnerable to a potential short squeeze. Now, the Dow transports themselves, they are obviously coming into potential support as well. If that were to crack, then the next level of support is further down, and it certainly does get very bearish. In terms of the Dow Jones itself, you can see on the 60-minute chart quite a powerful flush into the session itself. Now, looking at the HNS, that's more or less completed as well, and the target has been met on the downside. So yes, quite a substantial flush on the Dow itself too. Okay, in terms of support, you are looking at previous resistance equals support. So the next real support is around the 16,900. Excuse me, I've got the flu over the weekend. Okay, so you are seeing support further below. Okay, now in terms of the Nasdaq, excuse me. Okay, in terms of the Nasdaq itself, let's just bring up a chart. of the Nasdaq. Bear with me. Okay. Excuse me. Okay, the Nasdaq itself is into gap fill on the daily chart, which is at 4,500. If that were to fail, then you are looking at fib support, which is at 44.70, and then obviously you got the 200 MA support as well. And there's zones that you're looking at 44.50, and then obviously this key diagonal trend line at 4,400, which is gap fill support. So the levels on the downside are unlimited, quite a substantial flush from 4,700. I mean, that's pretty phenomenal, to say the least, from the Nasdaq itself. Okay, in terms of the Russell, or should we say the actual semiconductors and the to cross-verify the Nasdaq biotechs, you can see that we are coming into potential support on the biotechs. Previous resistance equals support. Obviously, if you flush lower, then you do have support below. In terms of the actual semiconductors, let's bring that up as well. So yes, quite a substantial sell-off on the semiconductors too. The key diagonal trend line has certainly broken out. We failed to hold previous resistance equals support as well. So the next key zone is going to be here, previous resistance equals support and horizontal support. You do have a gap fill here, you have a gap fill here as well. So gap fill levels, these are all the levels on the downside, and one needs to be certainly cautious of in terms of the trading session come Monday. So quite a substantial sell-off nevertheless. Okay. Now the Nikkei itself has been weak. It's failed to close that gap above, so certainly will be vulnerable on the downside now. And the Shanghai index certainly has held that key resistance all along, the fib 75%. So if I just bring up the chart of the Shanghai, you can see that we've held that fib 75%. So quite a substantial sell-off come into the Monday session. So you have concerns over China, especially with the weaker inflation data. You have Fed, obviously that's hawkish, so therefore resistance there as well. So it certainly is not looking good. Everything will be dictated by Europe, nevertheless. Again, when you have risk on, that causes a move in the dollar, obviously move in the bond market, and you are going to see a move in the gold market as well. The question is, in terms of S&P 500 and the FTSE especially, will commodities help or prevent any further sell-off? Now, there are concerns also over the weekend with regards to Greece as well, and its debtors, whether or not they can fulfill a decreased Mrs. Bailout deadline as talks with creditors drag on. So again, there's terrorism concerns, there's concerns with regards to Chinese growth, there's concerns with regards to a Fed that's super hawkish, and certainly a lot of concerns are certainly mounting, and we shall see exactly how the markets react. Now, the futures are certainly gapping down quite substantially, and we will have to see whether or not that can sustain the move in terms of moving lower, or we short squeeze higher. Again, with regards to the S&P or US markets, given the fact that they're not as prone as Europe in terms of the weakness, in terms of the actual risk-off nature, a lot of it has already been factored in on a late Friday sell-off, so that certainly needs to be taken into consideration as well. Having said that, weaker retail sales, Fed hiking rates, it certainly is a very powerful cocktail for a move lower. So again, certainly remain cautious. Now, if you look at the overall picture, if you look at the H&S formation on the S&P 500 and look to project that lower, so if I just take the left shoulder here, you're looking at a head here, you're looking at the right shoulder, and obviously down you go. You're taking the neckline, you're taking the head, which is at 2116, you're taking the neckline, which is at 2076, 2116. So you're looking at a 40-point drop. That takes you down to 2076 minus 20 minus 40. You're looking at 2036. So we're certainly overdue in terms of a bounce in terms of the market itself. Certainly long overdue, and there is a lot of support around this 2020 level, which is gap fill and previous resistance equals support. So a lot of it really does depend on, or hinges on, the actual European markets. Again, how substantially lower can they go, and how low will they go in terms of factoring in a risk-off scenario. And really, that's anybody's guess, really, as a trader. And we shall soon see how strong or how potent the actual panic selling mode is. And then we'll be able to project that onto US markets. But my overall inclination will be initially to short the European indices and Euro USD especially, also the risk FX currencies such as the Aussie and Kiwi, and then look for a late rebound on US markets and look to potentially go long, because you are looking at strength in US markets given the fact that they are into support. Okay, that's my summation, that's my expectation in terms of the markets going forward. Now, the only biggest concern I have is the dollar index, because given the fact that you have fear in the daily chart, like as you can see here, recoiling here, the dollar index certainly will start to spike higher. The weekly chart on the dollar index, you can see retesting the previous breakout, and off you go to the races. So it's whether or not, obviously, added the fake Fed rate hike as well, and that could really certainly spell a death to the US markets as well. So it just depends how strong this dollar catches a bid, and whether it can continue to sustain itself. And obviously, if it does, then the more the greater the concern of a potential rate hike as well. So these are all concerns that are going to drag, and it's not just one; there's a cumulative levels of cumulative concerns. So again, we shall see exactly how the market responds. Our job really is to be reactionary. If you go back to the S&P 500, if we are trading based on the S&P, then 20 is your first pivot. If that were to go, then you're looking at 1990. If that were to go, then it certainly does raise further concerns down to 1950. So it could be quite a bloodbath. Okay, so again, be nimble, trade safe. Wish you the best in terms of this trading week. Again, be sure to visit cfds.com for your trading needs. Goodbye now.